Welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So today, guys, will start off as a pretty solid green day, and then we completely sold off toward the end of the day. And you know me, guys. Again, I don't hold you hostage to the news. I tell you exactly what caused this sell-off. I don't sugarcoat it. This massive sell-off was predicated by one thing, and I'll get to that as soon as I just get to the indexes. The S&P 500 finished negative 2% in the red. The Dow finished negative 1.56 in the red. The Nasdaq finishing almost 3% in the red. Russell 2000 finishing negative 1.86% in the red, and crude going up again, which is not good for inflation, guys. So basically, the thing that drove the sell-off, guys, 100% was this consumer confidence index. The consumer confidence index basically dropped from 98.7 in May, and it was revised to read at 103.2. And it still fell 3 points. And this is basically causing this huge sell-off. The expectations of the index fell 73.7% to a reading of 66.4%. So this is a huge thing. Basically, consumers' grimmer outlook was driven increasing concerns about inflation, in particular about rising gases and food prices. This is basically making consumers not feeling very good for the next 6 months of what the economy might look like. Guys, and if you remember back in 2020, and maybe even early 2021, the guy that you would always want to listen to in CNBC was Tom. I'm sorry, I'm spacing out. Tom Lee. Sorry, Tom Lee was like the guy. Like every time during a bull market, you want to listen to what Tom Lee has to say. However, right now we're in a bear market, and there's a guy in CNBC. When he comes on, you gotta pay attention to what he has to say, and his name in CNBC, every time he comes on, you have to listen to what he has to say. And since we're kind of in a bear market right now, I think it was very important to share this video with you guys. His name is Dan Niles, and he had something interesting to say about this consumer price index, consumer confidence index. Take a look, guys.
This is looking today like what you've been predicting for a while, a series of bear market rallies that fade. What are the characteristics here that you're looking at, maybe particularly in tech, to see if your thesis is holding up?
Well, I think Nike this morning is a good harbinger of what you can expect during earnings season. And so I was looking at it closely. And if you look at the forward numbers, they got cut. And we had a tweet on it this morning. And none of the things that they talked about were unknown. They talked about foreign exchange. We all know the dollar is up a lot. Microsoft actually pre-announced negatively off of that 6 weeks after they gave guidance. They talked about China being an issue on the demand side. So again, not a huge surprise there. We know the cities are being locked down. And they talked about supply chain costs and freight costs. Again, no surprise there. What's interesting is this morning, the stock was obviously up 3% pretty early, and now it's down about 6%. And so you've seen this sell-off, even though everything that they talked about you kind of knew ahead of time. Stock's already down over 30% for the year, and it's still getting hit, and it's at near a new 52-week low. So I think that's gives you an idea of this whole mindset of, oh, the bad news is fully discounted, and they're down so much, and you just got to buy them because they're going to go up. That worked over 13 years when you had a Fed that was backstopping every move lower in the market. The Fed is now dealing with inflation. They're not going to backstop this. In fact, this is kind of what they want, which is demand slowing down to try to cool off inflation a little bit. So the Fed is your enemy for the first time.
Dan, what about the Snowflake upgrade today? Brentville upgraded it, and it's still down 3%. Does that fall in that same bucket of, shrugging off good news potentially and selling things off, and that telling you something about this market?
Absolutely, because Snowflake at the end of the day is still incredibly highly valued. And I think the mistake a lot of people are making is going, well, business sounds good today. And that's true. But you have to remember, you've heard about a lot of companies going ahead and either not hiring or starting to lay off people in the tech industry, where just a couple of months ago, it was about, oh, we can't get enough people to fill all these jobs that we have. And so if you are now starting to reduce your workforce or stop your workforce from growing, you're not going to need as many seats from a Snowflake or other software companies. So that will show up later in the year, where the impact you're seeing today is more driven by consumer demand slowing down. What you should see later during the year is the business demand slowing down, because those companies that serve the consumer are now seeing slowdowns themselves.
Guys, you basically have the news today. That's basically what's causing massive downward pressure on the stock market. Doesn't seem like there's any much good news on the horizon yet, guys. As I stated before, I'm still holding about 70 to 60% cash right now, and I'm still waiting on these big dips. So I did nibble a little bit on the triple Qs, but let me know what you guys are doing. Are you guys still holding, or are you selling off your assets? Let me know in the comment section. Thanks again for watching, guys, and I'll see you guys again tomorrow. Take care, everyone. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.